Hi everyone, hope you're all doing well, and today I'm going to talk about two stocks that have just crashed a huge amount. So we're going to go through these and my thoughts on them. I've had quite a few questions. Are these really good buying opportunities? People looking at that dip and going, is this an overreaction? Are these good opportunities to go buy? So I'll be talking about them today. Just for a few guys asking about Corsair and Skills on their earnings, I will cover them. I will cover them on the Patreon, and it will be an exclusive video on Patreon on Saturday where I go through all the companies that I report that have reported this week, and I'll do a review on them just like the week just gone. So yeah, I will cover them. They will be on the Patreon. So it'll probably be Saturday because DraftKings are reporting earnings quite late on Friday, and then I think Pinterest and Square are quite late on Thursday. It'll just take me a bit longer this week to go through them earning calls, with them being a bit later on in the week. So yeah, I will cover them. It will be on the Patreon for you guys asking about Corsair and Skills. But we're going to look into these two stocks that reported their earnings, and they have gone down a huge amount as well. Starting off with this one has been everywhere recently. And yeah, it is a massive talking point, which is Zillow. So Zillow actually went on my watch list a few weeks ago, and I was keeping a close eye on this one and just having a look, seeing what I thought of it. Now, what Zillow does is they are an American online real estate marketplace company that was founded in 2006. Now, if we look at the share price here, the share price has been, realistically, since it actually was on the stock market, it actually hasn't really done that much. It was only after 2020 that we went on this absolutely bonkers run, and the stock was up over 200%. Since then, the stock has started to come back a little bit, as you can see here, and this little drawback in the share price was me kind of going, oh, this stock is actually falling off, it's lost half its value, is this a good buying opportunity? And this is where I started clicking and adding it into a watch list. Didn't do too much DD on it, and then boom, the share price has absolutely fallen off a cliff once again. And yesterday, as you'll see, we're down at $65. The stock was down 22%, and that's a massive correction. So I was kind of weighing up this one, seeing what's kind of gone on. Is this a buying opportunity? And I kind of looked into this for about an hour yesterday, not as much as I normally do. Normally, if I'm doing a bit of research or DD into a company, I'm at least the first few hours, I'm going to spend a good few hours looking into it. But to be honest with you, I'll be straight up with you and honest right now, I saw a lot of red flags, and basically because I saw a lot of red flags, I just went, right, I don't need to do any more research into this one anymore, can cut it here, stop looking. And it wasn't really something that really interested me. There was a few reasons why. Obviously, you probably, if you've seen a lot of the Zillow stuff recently on YouTube, you probably have you know what's going on here. So what happened a few days ago is Zillow paused their home flipping service, and they said that they're going to do this to work through the backlog, and this was kind of mid-October. So this actually had a little bit of an effect on the share price, but you thought, okay, fair enough. So management came out basically saying that they have reached their capacity for home flipping, and that's it. Now everyone was like, okay, fair enough, understood. Good to make the decision. If they're kind of struggling now with the amount of houses they have, there's nothing wrong with pausing it. But then what totally happened is that it turned out this whole article or this whole statement wasn't true. And management actually told us a bit of a fib, because what they were actually doing is they were actually leaving their iBuying market. So this is where Zillow go in and buy the houses, and then flip them on for a sale. And you'll see the analyst here highlights Zillow's plans to pull out the iBuying business, given the inability to accurately forecast home prices and the risk that comes with that. It is likely to take until Q2 of next year to work through the inventory balance, he writes in notes to clients. So basically, what I've kind of got from grips here is that Zillow have gone really hard. They've raised a lot of capital. They've bought a lot of houses. They've pretty much overpaid for a lot of these houses, and now they're looking at this and going, this iBuying, we can't make it work. And the big problem you have here is what Zillow have done is they basically based a lot of what the company can be and the valuations of where Zillow's going. And basically a lot of this, the hype up here was because people were excited about this iBuying part of the business. And now the iBuying part of the business is probably not going to exist anymore. Well, it's not. They've stopped it. They've realised it's not going to work. They've realised they've overpaid for a lot of these houses. And now what they're going to do is they're going to sell all these houses off. And they're going to sell a lot of these houses off at a loss as well, which is a massive problem. That's going to take a hit on the balance, the cash balance of the company. And as well as that, you know, before that, they've raised a lot of capital to do this as well, which is an absolute nightmare. Now, obviously, when they do kind of sell a lot of these houses off, they probably will have a decent cash balance. what they'll do with that cash balance, we'll see. That could be, more than likely, would be a good idea to buy back shares, and that will at least get shareholders a bit happy, and all that dilution they've done previously, then that will obviously kind of level that out a bit. So maybe that's what they do afterwards, but obviously this isn't ideal, and obviously this is not great from management's point of view, because one thing that they basically built the company on isn't going to happen anymore, where a lot of the growth is for this company isn't going to happen anymore. And obviously management's a lot of investors have lost confidence in the management now. Management have obviously, based a lot of what the company is going to be on this, and then they go, okay, it's not going to work anymore. That's not going to be very good, and that's reflected in the share price. And just to put that into like context, you'll see here that Zillow offers here makes up over 1 billion of the revenue, and you can see here that the total revenue is 1.7 billion. So like this here, the mortgage side of the company could still grow a little bit. But the thing is that all these parts of the company that is still going to carry on. These parts of the company are going to lead the company to probably go around about 10-20% a year. The big thing that was growing in this part of the company here was this part, and that's growing at 531%, and that makes up a chunk of the revenue. So what you have here is you have this big chunk of the revenue of the company coming out of it. So the revenue is going to fall off a cliff in the next quarter over quarter. And then what you're going to have here is a massive growing part of the company doesn't exist anymore. And that is going to obviously mean that this company doesn't trade at the valuations that it used to. And then you put that into context of what analysts were projecting. You can see here, it's not been updated yet, but this is what all analysts were projecting. Realistically, it's going to be nowhere near that now. It's going to be awful. So realistically, to lose this part of your business, I am very surprised that the share price hasn't gone actually lower. I would actually predict the share price to probably go, I would say, into like the $40 range. I'm very surprised it's actually holding up this well. So yeah, it's not good. It is not good. You're losing, obviously, your growth of your business, a big part of your business, what your business was built on. Management have failed to deliver what they were saying that they were going to do. And yeah, for me at the moment, in the long term, Zillow might still be okay. It still might be an okay business with the other parts of the company it has. But from my point of view, you're looking at it and thinking, you do have that little distrust in management, that they made a decision, it didn't work out, that's affecting the company now, you're losing the big driver of revenue, and then you've got to factor in what that's going to do for the revenue side of it in the next few years, what that's going to do to the share price. For me, there's just too many red flags to get involved in this one at the moment, and I'm going to stay away from it from them sort of reasons anyway. But it will be one that I just add to a watch list, and we'll see how the company kind of redevelops itself in the next kind of 12-24 months, see where that share price goes. Like I said, I'm surprised it isn't a little bit lower after a lot of this bad news here, and then reassess it from there. But this is the reason why I originally weren't too interested in getting involved in Zillow, because with it being iBuying is very tight margins. A lot of these companies run at losses, and with it being in the US retail estate, I can't keep feet on the ground that much and keep an eye on what's going on and have that understanding, say, from the UK side of it. And that's what hasn't really, why I never kind of really got across the line on buying Zillow, which is very good now. Looks a very good decision. But yeah, at the moment, this is one where it's one of those drops that probably deserve to drop anyway. And the next one is Activision. So I got a few questions about this one. This is down 14% yesterday, down to $66, and overall it's now down around about 34%. Now for me, Activision is an okay company. It's definitely not too bad. The earnings weren't too bad either. The EPS was a beat and the revenue was in line, 6% growth. So it's a steady away company. It's not something that's growing at a 100% rate. It's profitable. I think the big reason why Activision went down is it made some delays into its games, and people didn't really like that because they're thinking, okay, further down the line, what's that going to mean? Well, they're probably going to have not as good profit growth, revenue growth if you delay in your next kind of few games because people aren't buying them, I guess. So that kind of worked its way into the share price. But as well as that, you'll see the stock's been on a downtrend recently. The reason why this one's been down is because of management. Management, once again, we've got a company here that management can make or break your investment. You've seen Zillow, they pretty much broke that investment, and Activision as well. There's a few questions I have around the management team at Activision. So even though the company's kind of a steady away company. It's still doing the good things. The valuation needs to go a bit lower for me, but once again, I look at management on this one, and these guys, once again, don't fill me with confidence. If I'm putting my capital into these companies, I've got to have confidence in that management team. And at the moment, there's quite a few questions around the Activision management team, and I'm kind of staying away from it. As well as that's quite evident in Glassdoor as well. If you look at Glassdoor, they've got 3.6. You see approval of CEO, that's 50%. And you'll see a lot of comments down here. There's a lot of negative points about the company and the management team in Activision. So yeah, once again, a bit of a shorter overall for this one, but with Activision, the company isn't too bad what they do, but for me, if I'm investing into this company, I need to have a stronger management team than what I do have in this, and so that's the reason why I'm currently not touching Activision at the moment on that drop yesterday. But yeah, it's not terrible, but not one for me at the moment. So yeah, that's a roundup of Zillow and Activision. So for you guys who want to see that video, hope it was useful. If it was, hit the like button. If you're new, subscribe, and I'll see you next video.